Hello, team. Trading Hood here once again, sharing with you guys our thoughts and um, all our process to financial freedom. Hope everything is okay. And we are starting our new year with the right food and with good motivation. As I promised, I wanna share with you guys this chart and why this chart has this exponential curve of growth. And this is your income. This is your returns, your total portfolio. And we will start with these two assumptions, which are the most important ones. So we have our monthly save money, as we talked in the previous video. We said we could save 1.5k monthly, and we got a yearly return about 10% if you don't watch this channel, because if you watch this channel and you don't miss any video, we can talk about 20%, which is a totally different story and a bigger or more exponential curve. So at least just put 10% or 15% to get motivated, and taking into account our first variable, which is monthly save and yearly returns. The last and third variable is the time that this money is stick to the market and producing returns in the stock market. So the most time you can leave that money working in the stock market for you, the better. So in this case, I hope I'm talking to guys with 18 years old or 20. You guys have a lot of way to come. So in this case, for average, and in this example, we will start saving at our 30 years old. And also, if you maybe are younger than 25 or 20, keep studying and keep trying to get promotions in your job and accumulating skills to increase your income, and that will allow you to save more and put more money to work for you. So this is the 1st of January of 2021, and we will invest 1.5k monthly, multiply it by 12 months of the year. So this is yearly. You will be 30 in this example for 21, 32 in the next year, 2022, and we will have our return, which is linked to this cell D3. And if we invested 18,000 in 2021, we will get at the end of the year more than 20,000. And so this formula, maybe I will link in the description or share, or maybe you guys can copy the formulas as I talk and show, and take into account this dollar sign, which allow you to move that formula for the rest of the years. So yes, for the next year you will continue, stick to the plan and invest another $18,000 for 2022. So if you sum your $20,700 $700 plus your $18,000 invested in 2022, being frugal, remember to be frugal, and so you will have $38,700 for the let's say the middle of the year, or at least March for 2022. And that year, this money you got in 2021 plus the money you saved in 2022, that will return to your portfolio. Now we are talking about 44,505 US dollars. So step by step, you can see how much you are earning, and yes, it's always getting bigger and more inspiring. So next year, another $18,000 plus what you already have with your returns. We are talking about $62,000, 500, and that year the return will get you to more than 70,000 US dollars. You can see that from the start, from scratch to 100,000, it took you around 4 years, but getting from 100 to 200, you are not working alone. This is not just your savings working for you, but the previous returns that start to work for you, because you didn't have this difference, which is, let's move it like this in here, the final return of that year minus what you saved. You didn't add this almost 3,000 US dollars. Those are the returns and the effort of you for not to take that money out of the market and keep it working for you. So yes, and that is just for the first year. So you can't imagine how much is just working for you, and in some time we will see, maybe later or in another video, is much more what is working for you, the total money working for you, and the addition or the returns of a year in your portfolio will be bigger than what you add to your portfolio through your savings. Because yes, the bigger the portfolio, the bigger the returns. So yes, you can see that if you start saving at 30 and keeping everything constantly, and when you are 50, you will get almost 2 millions. You can see that from 50 years to the 51st year, you get 200,000 US dollars growing in your portfolio. Just adding in savings 1,800. You just have to keep adding, and you will see how the interest and the returns will be bigger and bigger and bigger. Some like to plan for their retirement, like for example, when you got like 80 years, more than $100 million. But well, it's up to you guys. It's up to anyone to decide, because you can spend some some money while you are young, and you can, because well, maybe your stomach allows you, or your knee or your hint allow you, and not when you are maybe too old to get into a plane and travel. or maybe you just want to leave all this money to your child's, your sons. So yes, maybe from 60 or 50 years you can start to spend much more. It's up to anyone, and it depends your liabilities at that time, and your projects, etc. But yeah, for me, maybe being 50, that will be a great time to live your life, and that gratification postpone. You just can stop postponing it, and just enjoy more freely your life and your or help your family, etc. So this is the three principles also, and those are the variables: the amount of years with the money working for you, not taking it out from the market, but just keep adding and adding. And the principles I will recapitulate. The first variable is how much you monthly put into the market to work. What's the yearly return, which I specify that if you watch this channel and share some thoughts, you can have more than 15, we hope more than 20% yearly returns, always in search of the bull market or the market summers, which generally are somewhere. And just with 20% yearly return, this story is completely different. And yes, you can, maybe it's not that necessarily to wait that long to start to be free, financially free, and, and maybe get a better life. So yes, the principles are: look the bigger picture. Always remember this exponential growth and what you can get, and why you are postponing or taking that decision about just not buying or changing your car for a newer one, or moving to a more expensive city. Yes, changing your smartphone because the camera of the newer one is better, slightly better. And maybe be quite patient with your couple, your families. Maybe you will be sometimes criticized by the people who don't think like you, but you can always find some support in some others. And maybe in this channel we'll see what kind of people we get, and we hope the best or the most. Guys, just write below so your opinions, and we construct mm, better habits and better results for all of us. And yes, I will leave it like this for now, this video. Hope everything is okay and you are doing great, and see you soon.